is why do semiconductors matter? It's because they matter to anything that has an on and off switch. So that's regular everyday consumer products, but it's also the most advanced military products. And so it matters to us and it matters to them. And they want to be able to have the most advanced semiconductor manufacturing and capabilities worldwide in order to advance all of their strategic interests, which in many cases are antithetical to our own. And so they've prioritized it. This $48 billion that they've recently, this round of funding that they're putting into semiconductors is actually just a freeze frame of their longer term plan. It's actually $140 billion, a 10-year plan. There is a chip czar in China. And so they've long focused and long prioritized semiconductors because it matters to so many technologies that matter to our national security and to theirs.
Is it safe to say that the world is awash in industrial policies at this point, that you're seeing it really around the world, whether it's the United States or China, something that they've done certainly for a long time, but we're not immune to years ago actually helping out the U.S. semiconductor industry at another time and era, if you will, but we're seeing it in Europe. Is that kind of the way forward that we need to think about, that nations are going to be investing deeply in industrial policy, whether it's for national security concerns or supply chain concerns?
It's a clear trend. I think it was Bloomberg who had crunched some of the numbers and found that about $380 billion by governments have been invested in semiconductors. And that's not only the US and China. Many of our friends and allies are investing in semiconductors, and that's really good news because there are force multipliers in making sure that these add up to our collective security and value. So the EU has a $46 billion plan. South Korea just last week announced that they were going to commit another $19 billion. SK Hynix, one of their leading companies, and so this isn't government investment, but SK Hynix, a leading South Korean company, just announced a big $4 billion investment at Purdue Research Park. It's one of the largest economic development projects in Indiana. We've seen TSMC now up to $65 billion investing in the onshoring here in the United States. And so, yes, governments are investing, but so are companies too. And it speaks to the importance of tech diplomacy. Companies and countries across allies and partners are working together to make sure that we secure this technology.
What would you like to see more in terms of policy, especially when it comes to the semiconductor industry in the United States?
Well, we co-hosted at the Senate last month, the second annual CHIP Summit with Purdue. And we had almost every leading semiconductor company there, many partners and allies from across the world. And the number one thing that we talked about was workforce. And I'll just give you a stat here. There are about 345,000 jobs that the chips industry employs right now. There's going to be another 115,000 by 2030. At the current rate, 60% of those are going to be unfilled. And so we can invest as much as we want to in R&D, in labs, in new fabs, but unless we have the talent to be able to work in those things and advance the semiconductor industry, then it really doesn't matter. And so workforce capacity building that talent pipeline is as equally important as investing dollars.
Michelle, I want to go back to one of the exclusive stories that came from our team, Mackenzie Hawkins and Ian King, earlier this week about the U.S. slowing AI chip exports to the Middle East by NVIDIA and AMD. And they write that part of the concern is that Chinese companies could access these chips through data centers in the Middle East, meaning that they could still use data centers, even if they're not on or in mainland China, because of the ability to access those via the cloud or through partnerships with other countries. Is that a real risk to U.S. national security?
Yeah, I think it goes to show how much that tech companies are just as much in the domain of national security as governments are. And so many of these technologies are cross-cutting and borderless. And so the United States is trying to prioritize national security. We've imposed many export controls and restrictions on these advanced chips going to China. And there might be other ways for them to get in. So I think the U.S. is being strategic and careful to make sure that those advanced technologies and chips aren't getting in the hands of China, who want to use that to further their military ambitions and the People's Liberation Army. And so I think you see that happening here. And one of the reminders for the business world and for corporates is to remember that they do play a role in national security and our tech security. And we want to make sure, the United States wants to make sure that we're not, as they're doing business across the world, sacrificing long-term security interests for short-term profits.
Middle East, friend or foe of the United States, especially when it comes to high technology?
In many cases, they're proving to want to be a strategic partner, and that's where diplomacy comes into play. We want to make sure that we're working with them as we're partnering on critical technologies to make sure they're advancing our values and our interests. And that means data privacy. It means that they're helping, not harming human rights, that they abide by the rule of law, that they abide and respect intellectual property. And so I think there's a lot of opportunity for collaboration. There's a large fund in Saudi Arabia, I think just last week, that had said if the U.S. wants them to divest from China, they will.
Yeah.
And so there's a lot of opportunity for partnership, and the importance of tech diplomacy is going to make sure that when we partner on technology together, it advance our shared interests.
Michelle, just 25 seconds. Can we work things out with China in a better way? I mean, the pandas are coming back to D.C. Panda diplomacy seems to be back. Is that significant, just quickly, in your view?
Pandas have played a key role, it seems, in diplomacy over the long term. Look, I think at the end of the day, the U.S. has been really clear, and many of our partners and allies, like the EU, like the Quad in Asia, on the values that we want to place front and center when it comes to our relationship with China, and specifically on technology, and that's up to China. You know, are they going to make sure that our cooperation on technology advances human rights and intellectual property?
Michelle,
it's up to them.
We got to run. Thank you. Michelle Gaida of the Kroc Institute for Tech Diplomacy at Purdue. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet, developing story headline right off the Bloomberg Professional Service. Boston Beer in talks to sell itself to Suntory, the Japanese brewer. That's according to the Wall Street Journal. Boston Beer shares, they're up now by 25.5%. Again, the headline worth repeating, Boston Beer in hotel and casino operator Caesars Entertainment. Now, the size of the activist's stake and his intentions could not immediately be learned. Caesars is the largest owner of casinos in the U.S. Caesars up now by 11.1%. And Penn Entertainment shares are soaring after an activist investor called for the sale of the casino company, saying a failed deal and growing pattern of guidance misses have damaged management's credibility. Penn National up by 19.1%. Cannot ignore Dell today, down 17.8% after last night's earnings report. Dell is down the most in 4 years today after its first revenue increase since 2022 was not enough to impress investors with high expectations for the company's AI server business. Certainly that weighing on other tech stocks. Dell today lower now by 17.9%. Gap shares are advancing after earnings. They're surging 27.8%. Gap higher after reporting better than expected results. It also raised its outlook for the full year, showing the apparel retailer's bid to rebuild the business is moving forward. Again, Gap after last night's earnings report up now by 27.9%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we're getting ready to wrap up the month of May when it comes to trading. So let's get more on the markets and see what some trends might be indicating. Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle here in studio. She's joined by Carly Garner. She's founder of DeCarly Trading. Abigail, over to you.
Thanks so much, Carol, and great to have you with us. Carly, last time we spoke, I know that you thought that we could see the S&P 500 pop a little bit higher, but that there's significant resistance and then maybe go back down. I've been eyeing a range for the year of 2024. It doesn't really feel that way, but right now we are back down in that range, and it looks like just maybe we could go back below 5,000 pretty quickly. The RSI is starting to head lower too. Do you agree with that, or do you think that stocks are going higher from here?
No, well, I think there might be a little upside potential, but I think it's going to be short-lived. I do believe the upside potential is far smaller than the downside risk. So now is the time, in my opinion, to be conservative and to be mindful of the event risk that's out there. This market has shrugged off a lot of uncertainty, but that's not guaranteed going forward. The one fundamental thing about finance is where there's reward, there's always risk. And we've seen some really outsized returns in the stock market over the last handful of months. And that makes me think there's probably some risk lurking in the shadows that maybe we don't know about yet, or we do know about yet, but the market hasn't priced in.
So what sort of decline do you potentially see? And do you recommend playing it outright using options, which of course not for the faint of heart, or more of a hedging strategy?
Well, picking tops in markets is a really, really tough game, but I think it's a time to hope for the best but prepare for the worst. And you can do that with risk reversals. If you use the September options on the E-mini S&P, you can sell 5,600 calls and use the proceeds to buy 4,700 puts. That takes any downside below 4,700 off the table for your portfolio for anything that you have hedged. You're giving up profits above 5,600, but that's beyond most analysts' expectations. So I think that's a pretty fair bet, and you can sleep at night knowing that if something wild happens, you're not going to give up anything under 4,700.
So it's interesting, Carly, because we've known each other for a few years now, which I'm very grateful for. And to hear you say prepare for the worst, that strikes me as a possibly bearish message. I'm not saying that you're bearish, but just my interpretation is you usually are pretty optimistic and bullish. I'm looking at the Dow Jones Industrial Average right now, which a lot of people don't look at that much. But over the last couple of weeks, it has completely diverged from the S&P 500, the NASDAQ. It is down 5.2%, really making the case for the S&P 500's drop toward the bottom of that decline back below 5,000. Do you think that we should be watching the Dow for what could be ahead? Do you think that that support down there holds?
You know, I think that might be kind of a clue. What's interesting to me is I talk to a lot of retail traders, and this is an unscientific poll, but it seems to me like there's a lot of leverage into the system that we aren't aware of. For example, retail traders are very heavily into selling S&P puts. It's a strategy that's basically printed money for the last couple of years, but that at some point, the piper's going to have to be paid on that. And we're also seeing leveraged ETFs in the retail space. So I think it's a lot of products that Wall Street has created to to sell to retail traders that they don't fully understand the risks. So if the fire starts, if something sparks the fire, these sorts of things, especially zero-day options, are going to fuel the flames, and it could get ugly really quickly if it happens.
Well, we may certainly want to check back in on that possibility with you. Great on these markets. Carly Garner, DeCarly Trading, founder over there. Thanks so much for joining us. Carol, back to you.
All right, Abigail, thanks so much for that. All right, folks, for those of you watching on television, the close is coming your way in just a moment. But for those staying with Bloomberg Business Week, Tim and I, a lot coming up, including the Wall Street billionaires that are rushing to back former President Donald Trump. Verdict be damned, a big reason? Yeah.
You can say it.
Money. We'll explain.
Also, we're talking about Bitcoin mining post-halving with the CEO of Core Scientific. All that and more up next on Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are continuing here on Bloomberg Business Week, just about 60 minutes away from the closing bell. Carol Masser along with Tim Stenivek on, yes, TGIF, folks, May 31st. It is a Friday. We're wrapping up the day, the week, and the month of May. So a lot coming your way in the next 120 minutes. Having said that, we are still covering all angles of Donald Trump's 34 guilty verdicts, from fundraising to how it could affect the election come November. So do not go anywhere. We're on it. That's where we start.
Well, on that one, Wall Street billionaires are rushing to back President Trump, the former president. Verdict be damned. A big reason, money. Will explain the nuances, though, as well.
Yeah, there's always nuances when there's money. A check on the Bitcoin mining ecosystem post-halving with the CEO of the Bitcoin mining company, Core Scientific. Got a few questions for him. That's coming up.
Okay, and you've heard of the Wolf of Wall Street.
Yes.
You've heard of the Witch of Wall Street.
Yes.
What about the Trolls of Wall Street?
Now I do.
Okay, it's the title of a new book, and it's all about the Reddit board, Wall Street Bets. You're not going to want to miss this. Nathaniel Popper is going to be joining us a little bit later in the program.
Good weekend read, especially since it's supposed to be a nice one here in the New York Metro. All right, first up, folks, let's get to Charlie Pellet with a check on the trade and, of course, your top business stories. Hey, Charlie.
Well, hello there. I thank you very much. And we've got 59 minutes to go ahead of the closing bell. Stocks lower with the S&P right now down 14, drop there of 0.4%, on track for a losing week as we move into the trading month of June. Dow Industrial is up 261 right now, up 0.7%. NASDAQ hard hit today. Tech stocks tumbling. Right now we've got NASDAQ down 200 points, a drop there of 1.2%. A rout in the world's largest tech companies dragging down stocks, Dell among them. Dell shares down 18.1%. Among this morning's key economic data points, the core personal consumption expenditures price gauge. It came in line with estimates while posting the smallest gain this year. Subhadra Rajap is head of U.S. rate strategy at Societe Generale.
We think that the Fed's going to stay on hold for the remainder of the year, and this data point doesn't really push. There's no sense of urgency, I think, from the Fed. With inflation starting to ease up, growth is starting to come down.
Societe Generale's Subhadra Rajappa interviewed on Bloomberg Television. 10-year 4.50% and the 2-year 4.88%. Spot gold is down 0.9%, 23.22 the ounce. West Texas Intermediate crude down just over 1%, 77.08 a barrel. Bitcoin down 1.7%, 67,318. Dell now down by 19%, falling the most in 4 years after its first revenue increase since 2022 was not enough to impress investors. Gap, meanwhile, trading higher. It reported better than expected results and raised its outlook for the year. Gap right now up by 28%. Recapping, S&P down 13, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Certainly do appreciate it. Well, we continue our coverage of the historic guilty verdict in the Donald Trump hush money trial. Trump campaign said it raised $34.8 million after a Manhattan jury delivered that guilty verdict in the trial, highlighting how the first former U.S. president convicted of a felony is using his legal woes to rally supporters. For more on the implications of the verdict, we bring in Bloomberg Balance of Power co-host Joe Matthew. He joins us from our Washington, D.C. bureau. Joe, I want to talk about this angle here because I think this is a big part of the conversation is to what extent does the guilty verdict that we received last night that you and Kayleigh reported on air, does that galvanize his supporters? Does it energize his supporters? And I think we're starting to get some of those answers today.
That's for sure. You just said it, $1 million per count. What do you think? 34 million. Although, according to Donald Trump, by the time he spoke from Trump Tower today, it was closer to 39. I don't know that that's official. We haven't confirmed that independently. But there was a burst of activity last evening in a lot of different forms. Financially, to your point, we saw these are, by the way, small donors, small cash donors, not whales putting that kind of money in. They crashed the web app that is used to donate to the Trump campaign in the hour after. To give you a sense, 30% of the donors were first timers. All right, wow. So that's the financial side there. The political side was also immediate. Within 10 minutes of the verdict, you had a statement out from the Speaker of the House. Not his attorney, from the Speaker of the House. And then, of course, we heard from the Republican leader of the Senate after that, rank and file immediately. And there's a sense of outrage among Republicans here in Washington. And when lawmakers come back next week, that's going to manifest itself in a couple of different ways. But get ready for a lot of hearings from the judiciary, the oversight, investigations into DA Alvin Bragg. All that stuff is coming.
All right, so now President Joe Biden and Donald Trump, former President Donald Trump, now enter, a general election campaign, and they are navigating a sudden, unprecedented scenario in U.S. political history, Joe. So we now have the leading candidate in the presidential race is a convicted felon. What kind of twist is that? How do you think about that? How do folks who have run normal campaigns kind of strategize around that?
They kind of can't. It's because we've never seen this before, and we keep asking that question as well, and it's really worth kind of stopping down and acknowledging the absurdity and the history of the moment. This is where we are now. He's going to be meeting with the former president of the United States, going to be meeting with a probation officer in a couple of weeks. That's the next thing he'll do before sentencing on July 11th. Imagine how that conversation is going to go when he's interviewed by a probation officer. The sentencing will be 4 days before the beginning of the Republican National Convention, at which he is supposed to be unveiling a vice presidential candidate. So if you're the campaign, you're trying to figure out where to put these people and take the best advantage of the time that you have. By the way, I didn't mention a debate that's going to take place on June 27th, all in this period of time while we're waiting to find out if he could be imprisoned. And that is a possibility. A lot of people don't think it would happen, but he certainly could go to jail for a day or some extended period of time. He's already referring to himself as a political prisoner.
I think some would say a lot of unthinkables have happened when it comes to Donald Trump. Having said that, Joe, you know better than most that this is a president, has survived 2 impeachments and numerous other scandals. So still leading Joe Biden in many, many polls. So, whether or not this hurts him politically, right? It may not.
No, this is the big question of the hour. There are polls in the field as we speak. Maybe we'll know a little more about that, a little more clarity in the next couple of weeks. We go back to January in our Bloomberg News poll when we asked swing state voters if a conviction here would change their minds, and 17% said that it might. 8% said it would very much change their minds. So when you consider the idea of Donald Trump gaining voters out of this, it's probably not terribly likely, but it does, to your point earlier, galvanize the base. It's a motivating factor for his team. But let's think about the long term here and what people are actually going to witness over the next 6 months. Is there a longer term corrosive effect, knowing that this is a convicted felon now who paid hush money to a porn star?
Yeah, I think that's a really good point, Joe. And I also wonder about the way that it's galvanized support from prominent Republicans who used to run against him. Governor Ron DeSantis, for example, former presidential candidate, tweeting just minutes after the verdict last night, that the verdict represents the culmination of a legal process that has been bent to the political will of the actors involved. In America, the rule of law should be applied in a dispassionate, even-handed manner, not become captive to the political agenda of some kangaroo court. I don't know about you, but my Twitter feed was full of retweets of this tweet from the governor of Florida and a former opponent to the frontrunner Republican right now, former President Donald Trump. Have we seen any examples of the other side, of prominent Republicans coming out and saying, now that he has been convicted as a felon, I am withdrawing my support from the former president?
No, but I'll point you to Larry Hogan, the former governor of Maryland, a Republican, is now running for Senate in Maryland and might well flip that seat red. Very popular governor, and thinking about where he is in Maryland speaks to his reaction. He was a never-Trumper. He almost ran no labels, according to a lot of folks, against Donald Trump. And he tweeted shortly after that we should respect the rule of law and respect the process in this case. Donald Trump's campaign manager, Chris LaCivita, replied to him on Twitter and wrote, "Your campaign just ended." And so there are questions about where folks in the middle of the road are going to be here. What does that mean for Larry Hogan? I don't know, maybe nothing in the state of Maryland. But no, I haven't seen anybody withdraw support. It's been quite the opposite. And we've also seen major bundlers, the big donors, I think Ackerman, think Adelson, line up behind Donald Trump in advance of the verdict, knowing well that it could be 34 guilty counts. And there's no headline saying that he's losing any of them.
Both Joe Biden and Donald Trump know and understand that it's all going to be decided come November. So having said that, how does the Biden team kind of incite his base, or more importantly, Joe, those undecided voters?
Well, we heard from him for the first time on this a little bit earlier. It's interesting. They called a late news conference to announce this ceasefire proposal in Israel, which in itself would have been a lead story on any other day. But he started by talking about what happened in New York yesterday. He made the point that it was a state case, not a federal one, by the way, as the former president tries to imply that Joe Biden is behind this. But a pretty interesting line talking about the American principle that no one is above the law. And he said that now, given the opportunity, Donald Trump should be able to appeal this decision. The line, though, that I think is the takeaway, he said it's reckless, it's dangerous, it's irresponsible for anyone to say this is rigged just because they don't like the verdict. And we did hear that repeatedly from Donald Trump when he spoke today at Trump Tower. By the way, a news conference, it was billed. He didn't take one question from reporters.
Interesting. Joe, I think about, the races that you have followed, the politics that you have followed over the years, over the decades. You go back 10 years and any of this would have made a candidate drop out of a race several times over.
Different era, no question.
A different era, but we obviously are living in a different era. And we have voters that obviously either feel like either neither candidate speaks to them, or one speaks to them more than the other, or it's going to be a vote about liking someone a little bit more than the other one, or liking someone less than the other. It's just kind of a weird era. So I don't know. I mean, is it that anything could happen come November? How do you think about polls, which have certainly fooled us before?
Well, look, you just said a lot. I mean, imagine Gary Hart be hearing this story a couple of years ago. Also, but think about Bill Clinton, right? When he was finally impeached, that actually played in his favor. It had a galvanizing effect and a motivating effect where people thought, Republicans overstepped in this case. And that's not something that you could have predicted. And we're just not able to predict what's going to happen here. But I am going to be interested to see what the immediate reaction is in the polls. It probably will look different in a couple of months.
Right.
Let's also see how it impacts his vice presidential pick. Because if Donald Trump does find himself behind bars, or I don't know what this is going to involve in terms of probation or his ability to travel, he's going to need somebody who knows how to campaign, who can get out there and speak for him, and that might be a world we're looking at.
That's an important point that we really haven't explored, which is why we always love talking to you. All right, Joe Matthew, thank you so much. Very hardworking, and a lot coming at him and his team this week. Our thanks to Bloomberg Balance of Power co-host Joe Matthew. Now, Trump's legal woes, Tim, not precluding financial elites from throwing their weight behind him. That's for sure.
Yeah, in fact, some financiers who abandoned Trump after his supporters stormed the U.S. Capitol on January 6, 2021, and kept their distance as he continued to claim falsely that the 2020 election was stolen, are now throwing their weight behind him again. Well, a big reason, Sri Natarajan is going to tell you all about it. He and Amanda Gordon write about the growing number of prominent figures in U.S. business and finance who are embracing the possibility of a Trump restoration. Criminal conviction be damned. Sri is Bloomberg News senior finance reporter. He joins us here in the Bloomberg Interactive Brokers studio. A big reason, in a single word, Sri, what is it?
Money. That is a primary factor here. Taxes, regulation, that has been something that has been a bane for the deep-pocketed Manhattan class, the deep-pocketed class of finance, and a lot of them are keen to go back to the Trump fold. Yes, they have rationalized it with other reasons as well, and those have been pointed out. Case in point being Steve Schwartzman, who came out and, a week before this guilty verdict said he's throwing his weight behind Trump, and it's a second U-turn for him. First he was a no, then he was a yes, then he left in 2022. But interestingly, Schwartzman highlighted growing tide of anti-Semitism as one of the reasons. But it's a good time to remind listeners that back in 2017, Schwartzman was the chair of that business council under the Trump presidency, and in the wake of the white supremacist rallies in Charlottesville, that committee was disbanded, and he tried to distance himself back then as well. And again in 2022. So it is really a lot of these people who have influence and sway who are coming together and trying to throw their weight behind Trump. Opportunism might be a reason. At least that's what we've heard from at least a couple of senior people we've spoken with. And it's hard to argue against that. If you've made the conclusion that you don't believe this is a dead date, you're convinced that it is going to be a Donald Trump victory, then there is some benefit in jumping in early and saying you back Trump.
Okay, the taxes part notwithstanding here, but in terms of money, some of the folks who you refer to in your story, Steve Schwartzman, for example, if you were to ask them now if you're better off now than you were 4 years ago, a lot of them would say yes, at least financially, because they are a lot wealthier than they were 4 years ago. They haven't been hurting during the Biden administration, is another way to put it.
A lot of them perhaps should be saying yes. I don't know if they will say yes.
Yeah.
We spoke to Whitney Tilson. He was a former hedge fund manager, ran Case Capital Management, shuttered about 6 years ago, but still is with Stanbury Research right now. And let's be clear, his leanings completely on the left.
Yeah.
He can't even contemplate voting for a Trump, but he does make a point that for people in the investing business, the Joe Biden presidency has been extraordinarily good for them. Success of stock market highs, low unemployment, soaring corporate profits. So he says it's indeed puzzling how the very people who've done the best under the Biden presidency seem to be the most dissatisfied with this presidency.
Well, do you put that question to those that are big financial types that are now backing Donald Trump? Like, what is that? What is their response to something like that? Look at the last 4 years, whether it's the equity markets, whether it's the economic backdrop. It's amazing kind of the disconnect, or what are we missing?
Yes, but they'll also throw in other reasons, including inflation, rising deficit, the border situation, the handling of the Middle East conflict. So, and it's hard for us to sit here and judge that whose points have more merit.
Right.
And that is something we've avoided trying to do in the story. But what we're trying to point out is this isn't like 2016. This isn't like 2020. 2016, a lot of people sneered at Trump, especially the successful folks in New York always saw Trump as a bit of an outsider, the Queens guy, real estate guy they couldn't be bothered with. They never expected him to win. 2020, you went through 4 really crazy years, to put it simply.
Yeah.
But 2024 seems to be, you know what? Maybe a Trump presidency is not bad. We've not had a seat at the table in the Biden White House. He doesn't seem to be leaning on the captains of the industry, especially the titans of finance, to how he should run the country. So if you're feeling left out a little bit in the cold, doesn't hurt to go in early and say, I will back Donald Trump.
Maybe even as a message to the current president.
100%.
What?
It's also interesting. I will refer listeners and viewers back to a April story from Amanda Gordon where she talked to John Polson, the man famous for big bets against subprime mortgages. She did a Q&A about why he is backing Trump. I would encourage everyone to go read it. One part that I found very interesting was the way that he spoke about January 6th. He said, I don't think January 6th was an insurrection nor an attempt to overthrow the government. It clearly was, though, a demonstration that got out of hand. I think people would have disagreed with that a few years ago.
How many months? 5 months? It's going to be interesting, no doubt about it. Shri, thanks so much. Important story we want to get to. Shri Natarajan, senior finance reporter here at Bloomberg News, right here in our Bloomberg Interactive Brokers studio.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P well off session lows. Got to keep it locked into Bloomberg Radio right through the close to see how things shake out. We're looking at a 5-point loss right now on the S&P at 5230, down by 0.1%. Very much a tale of two markets today. The Dow up 285, just about the best level of the day, up 0.7%. A big retreat for NASDAQ, though, down 157, again off session lows, but still down 0.9%. 10-year yield 4.50% with the 2-year right now 4.88%. Gold is down 0.9%, 23.22 the ounce, while West Texas Intermediate crude oil down 1%, 77.09 for a barrel of WTI. We do have a renewed bout of volatility gripping stocks in the final stretch of May. As for the market backdrop, Carly Garner is the founder of DeCarly Trading. She was a guest right here on Bloomberg Business Week.
I do believe the upside potential is far smaller than the downside risk. So now is the time, in my opinion, to be conservative and to be mindful of the event risk that's out there. This market has shrugged off a lot of uncertainty, but that's not guaranteed going forward.
Carly Garner, founder of DeCarly Trading. Sources tell Bloomberg Carl Icahn has amassed a sizable position in hotel and casino operator Caesars Entertainment. Caesars, by the way, the largest owner of casinos in America. Shares of Caesars up by 11.3%. Not the only casino company making news today. Penn Entertainment shares soaring after an activist investor called for the sale of the casino company. Penn National up by 19%. Recapping, S&P now narrowing its loss to 3 points, down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, thank you so much, Charlie. Do appreciate it. The Bitcoin halving, Carol, you remember. We talked about it a lot about 6 weeks ago because it happened a bit over a month ago. Just a reminder, it was a highly anticipated software update. It cut in half the so-called mining reward. It's the amount of Bitcoin released from the network to compensate companies known as miners for validating transactions. It potentially dealt a blow to the Bitcoin miners. One of those companies, Core Scientific, a publicly traded Bitcoin miner based in Texas. They've got operations all over the country: North Dakota, Kentucky, Georgia, Texas, and other states. Adam Sullivan is with us. He's CEO of Core Scientific, and he joins us from Austin. Adam, good to have you with us. Before we get to how you guys are doing post-halving, just catch us up on what's been a wild few years for the company. It declared bankruptcy back in 2022 when crypto prices crashed, but back in January, the company emerged from Chapter 11, and it's publicly listed once again. Give everyone an update.
Sure. So we've grown one of the largest digital infrastructure footprints since we were founded back in 2018. You know, we built infrastructure leading up to what was planned originally to be over 2 gigawatts of power dedicated to the Bitcoin mining industry. Now, you mentioned our Chapter 11 process. You know, in 2022 was an interesting year. We had Bitcoin price declining. We had a very sizable Bitcoin on balance sheet. But you also had the war in Ukraine, which led to higher energy prices across the globe. And so for Core, we really had a capital structure issue. It had nothing to do with our operations, capital structure, as well as the energy price movement, as well as Bitcoin. And so we went through our Chapter 11 process, actually had one of the most successful solvent debtor cases in history in terms of equity recovery. And now we're publicly traded. We listed on the NASDAQ back on January 24th of this year.
All right. So what's different about the business now, and how are things going since the halving?
The business is performing very well. So the Chapter 11 had nothing to do with our operations. Our operations, led by a data center-based team, has really led us to be one of the most consistent Bitcoin miners in the industry. I would say one of the interesting parts is post-halving, you know, we expected to see, you know, more movement in the difficulty or how difficult it is to mine a Bitcoin. And, you know, what we've seen is we saw one difficulty adjustment lower, but in reality, the profitability today is still strong enough that the majority of the network has actually been able to stay online and continue to be profitable.
Hey, Adam, what changes have you made to your capital structure at this point to prevent another Chapter 11 bankruptcy situation from happening again if we were to see the price of Bitcoin crash again?
Yeah. So if you go back to 2021 and 2022, really a lot of the debt that was available was short-dated debt, right? And so because people didn't want to take that long-term risk on Bitcoin or Bitcoin mining, they didn't know what the risk profile would look like in 3 or 4 or 5 years. Going through the Chapter 11 process, we actually emerged with, rather long-dated debt for this industry. We wanted two things out of our Chapter 11 process. That was time and optionality built into our capital structure. And so very limited debt service over the first 3 years, and then significant optionality built in. So via a warrant, a cash exercise warrant that would bring in $670 million, which would essentially eliminate our debt, and then also a mandatory convertible note. And so there's really two instruments in our capital structure where if we continue to perform well, we should be able to knock our way through each of those trigger points and actually eliminate all of our debt.
Hey, one thing I want to ask you. On Wednesday, your stock popped up about 5.5%. This happened after BITIG raised your recommendation or their recommendation on the company to buy from neutral. And they say it came with a couple of things. First of all, and I want to address this, expectations of a firming Bitcoin price, which it was Gregory Lewis, the analyst over there, which should allow the company to aggressively deleverage as warrants are exercised. So talk to us a little bit about that. What kind of insight can you come around that? And, what kind of Bitcoin price has to happen for that to happen?
I think it's really a give and take between network difficulty and Bitcoin price. So everything we think about is in hash price, which is actually a dollar-denominated amount of revenue that we generate. But as Bitcoin price continues to increase, he mentions that tranche one cash exercise warrant, that brings us into a positive net cash position. And so eliminating all of our debt, putting us in a positive cash position, those are things where we're very close to those exercise prices. So that exercise price in that warrant is 681. I believe we're currently trading today in about the high fours. And so that type of optionality was what I was talking about earlier. It's a significant opportunity for us.
All right, and then the other component of it is that they're bullish on the opportunities that your company has for existing power capacity to be deployed in non-crypto data centers. Give us some thoughts on that and some color around that.
Yeah, so we announced in our Q1 earnings call that we're planning to dedicate about 500 megawatts of the 1.2 contracted megawatts that we have to HPC. There's an incredible demand in the market, especially as the power density of these new GPUs from NVIDIA, from AMD, continue to come on market. It's not necessarily something that can be serviced by all these tier 3 data centers. And so this is where we have a significant opportunity to actually build a niche inside of the data center industry, and the scale of which would put us into the top 10 data center companies in the United States. And so that's where we're focused right now, continue to build out that part of the business. And our hopes is that over time, our investor base starts to realize stable, long-term visibility into our cash flows actually brings a better valuation for the company.
HPC, of course, being high-performance computing. Hey, Adam, I'm wondering about the power issue here that we're talking about. If you're going to be a data center provider for all of these companies and you're going to reliably mine Bitcoin post-halving, what's the cost that you're paying for electricity, and how do you keep that cost in control, especially given the problems that you faced a couple of years ago at the beginning of Russia's invasion of Ukraine, when energy prices spiked and led to the bankruptcy?
Yeah, so on the data center side, all of the utilities are passed through to our clients, and our power prices in these locations, when we first went to look for sites, what we looked for was low cost and abundant power. And so that provides us the opportunity, as these data center companies and as these technology companies are approaching us, to actually provide them with lower cost power than they would necessarily see at some of the other locations that they're looking at. Now, we had a low 4-cent power cost in Q1 of this year, and that's something that's still extraordinarily attractive for Bitcoin mining. But as we start to shift towards certain locations towards HPC, we'll actually be able to continue to bring down our all-in power costs at our Bitcoin mining facilities. And so that's something that gets us most excited about the opportunity.
But what about the stress to the grid and how that impacts maybe consumers generally who are just trying to keep power going in their homes?
Yeah, so our power contracts are all for 24/7 power. We choose to participate in certain power programs at different locations, and that's based on economics, based on profitability that we're determining based on prevailing market prices of Bitcoin, what the network difficulty is at that point in time. But we have the opportunity to actually move towards the 24/7 power contracts if we so choose. And that's something that the data center companies can choose, or the technology companies can choose what type of operating mode they would want to operate in. It depends on the types of programs that they're running at the facility. And also, what are the other things that they're putting at those facilities? So are there generators? Are there batteries? All of those different components can allow them to still participate in those intermittency programs that we participate in today for Bitcoin mining, but they can choose different types of products like those batteries to actually supply that power during times when they might lose power from the grid.
One last thing.
Go ahead.
Well, in terms of data centers, do you anticipate that that's going to be more of your business going forward rather
That was my question too.
than Bitcoin mining? And just got about 50 seconds. Because it sounds like it's a pivot, a big pivot. Is it?
It's definitely, it's maximizing, I would say it's maximizing the value of our infrastructure.
No. Is it a big pivot though?
It's not a big pivot. We started it really as a data center business, right? We provide digital infrastructure initially to Bitcoin mining companies to host their machines. And now we're choosing to host HPC or GPUs and other types of compute for high performance computing.
For AI,
so
right?
It's not a big shift for us as a business.
For AI. But it sounds like that part of the business could be ultimately your business going forward. Is that kind of yes or no?
It could be a big part. It will be a big part, but we're going to continue to find new assets to mine Bitcoin at.
All right, just curious, because that certainly plays to the analyst call this week that had your stock popping. Hey, Adam, always good to get some time with you and get more insight into your business. Adam Sullivan, he's CEO of Core Scientific, joining us from Austin on this Friday.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Amy.
Hi, Tim. President Biden says Hamas is no longer capable of carrying out another large-scale attack on Israel as he urges Israelis and Hamas to come to a deal to release remaining hostages for an extended ceasefire.
Full and complete ceasefire. A withdrawal of Israeli forces from all populated areas of Gaza. Release of a number of hostages, including women, the elderly, the wounded, in exchange for release of hundreds of Palestinian prisoners.
Biden addressed the nearly 8-month Israel-Hamas war as the Israeli military confirmed that its forces are now operating in central parts of Rafah in its expanding offensive. Donald Trump speaking out about yesterday's guilty verdict. He continues to insist without evidence that the trial was not fair and that the judge is biased.
It was a rigged trial. We wanted a venue change where we could have a fair trial. We didn't get it. We wanted a judge change. We wanted a judge that wasn't conflicted. And obviously he didn't do that.
President Biden responded to that, blasting Trump for his attacks on the judicial system.
And it's reckless, it's dangerous, it's irresponsible for anyone to say this was rigged just because they don't like the verdict.
And Trump's former lawyer and so-called fixer, the prosecution's star witness, Michael Cohen, told ABC's Good Morning America today that he can't understand all the support for Trump in his run for the White House.
I'm not sure how it makes any sense. This is not just now a felon, convict, but it's also a man who has openly stated he wants to rewrite the Constitution on day one. He wants to be a dictator.
Trump's team is expected to file an appeal. His sentencing is set for July 11th. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:40 is the time on Wall Street, and we are looking at a very mixed market with the S&P little change coming back from steep losses. Let's head right over to the first word breaking news desk for today's afternoon call, the Friday edition. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed with the Dow currently higher by 291 points. Like you said, S&Ps are a little changed, and NASDAQ still lower by 0.8%. The U.S. 10-year yield at 4.5%. Gold is lower by 21. Oil trading in the red. And Bitcoin, that's lower by 1.4%. Among the main 11 S&P sectors, leaders were energy and real estate. Tech and consumer discretionary were under pressure. And leaders to the upside in the Dow, Salesforce and UNH, while Amazon and Microsoft led to the downside. After earnings, MongoDB fell as much as 27%. Dell plunged 17%, while the Gap rose 29%. In the activist space, Carl Icahn is set to build a stake in Caesars. And in deal news, Boston Beer jumped intraday on a report the company is in talks for a sale. Wrapping things up, Salesforce rose 5% after yesterday's 20% plunge. Live from First Word Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. S&P just turning positive, up 3 now. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, as we like to say, TikTok, everybody. 18 minutes, under 18 minutes left in the Friday trade. Getting ready to wrap up today, wrap up the week, wrap up the month of May. It's been an interesting one. Bullish for stocks, but it also looks like Treasuries actually have had a pretty good run here this month. I think the best one here in 2024. So let's get to it. Let's talk a little bit about the trade.
We got John Mowry with us, Chief Investment Officer at NFJ Investment Group. They've got about $6.4 billion in assets under management. John joins us from Dallas. John, happy Friday. How are you?
Hi, yeah, we made it through the storms down here so far.
That's good to hear. And we've made it almost through the month, so.
Yes, yes.
We can all appreciate that. A lot coming at us.
A lot coming at us,
Yeah.
exactly.
Hey, talk to us a little bit about what's on your clients' radar right now. When they pick up the phone and call you, or when they send you some frantic emails late at night, what are they saying?
I think that inflation and the rate at which that's coming down, and then subsequently what the Fed's going to do with interest rates, has definitely been on everyone's minds. And, you know, the reality is inflation can be really a pretty regressive tax on Americans. But the reality is the interest rate policies have also been pretty challenging in terms of how that's affected the smaller and medium-sized companies. And that's been masked in large part by the Mag 7, the AI trade. But below the surface, there's been a lot of challenges in the small and medium businesses. And I think that's been just a concern for the overall economy, as well as when those areas might be more rewarded in terms of a revaluation.
All right, so if I just do a quick, easy comparison, the S&P 500 up about 10% so far this year. You've got the small caps up not even 2%. So are you saying that you're finding opportunity when it comes specifically to the small cap space, and you would suggest investors allocate some new money there?
Absolutely. I think that some of the areas that are most interested are some of the equity income-oriented areas of the market. And there's a reason that they're cheap. If you think about where investors can plow capital today, you can have a risk-free rate on the short end of the curve at 5, or alternatively, you can hop into the NASDAQ and you have fast-growing companies and, again, that AI trade. So there's been a whole area of the market that's been kind of goalied out, if you will, and that would be some of the banks, some of the REITs, the utilities. These areas have been directly impacted by the interest rate policy, and they predominantly sit in some of the smaller and medium-sized areas of the overall U.S. capitalization. So we do see opportunity there. The question would be, well, hey, if those areas have been hurt by higher interest rates, when do you see that becoming more of an opportunity in terms of lower interest rates? And the reality is, when I look at the Fed funds rate relative to the 2-year bond yield, that is one of the widest spreads going back to the 1980s. So the bond market has been signaling to the Fed to lower interest rates. They've been reluctant to do so, understandably, But nonetheless, I believe that does create an opportunity for investors that want to have a little bit more of a longer term time horizon and get into those areas in many cases that are the cheapest since actually going back to the dot-com era.
All right, so you came to play. You gave us, our producer, Paul Brennan, a couple of stock picks. So let's get to it. Although I find it interesting, having looked at them after saying that you find opportunities in the small cap universe, that none of these are small caps. So maybe you can kind of start there. Alexandria Real Estate, it's a REIT that you like, an office REIT. It's down about 7%, but it isn't a small cap. It's over 20 billion market cap. So first of all, explain that disconnect, because you're saying you like small caps, but these are certainly larger.
Definitely so. So I would say that where we're seeing the opportunity would be in the more the small and mid areas. This would fit squarely in that mid cap arena. Okay. I mean, you think about these companies like NVIDIA when you got into the trillions. These are pretty small by comparison. But nonetheless, they are more in the mid-cap space, although FFIN at $7 billion is a little bit smaller. But Alexander Realty, just to touch on that, that is an office REIT. And when you say the word office, that's a little bit of an unnerving comment when it comes to REITs because of what occurred post-COVID. But this one's different. 98% collections, and that's because their tenants are pharmaceutical and life science companies. They can't easily relocate. They're on the East and West Coast near universities. And as you can imagine, you can't just up and move a laboratory like you can traditional office space. And Alexander Realty is actually growing its dividend faster than the rate of inflation, yielding over 4%. And the multiples below where it was in March of 2020. Imagine if you could get in a time machine and go back and buy stocks, trading at where they were during COVID. And the reality is you can. You just have to do it in some of the less popular areas like an Alexander Realty.
So the question that I have is what you want to avoid right now. Where do you not want to be?
So specifically with the REIT area, I think that you have to be very cognizant of some of the traditional office REITs. I think those are under pressure. There's no question that we have structurally changed how folks are going to be going in and out of the offices, and that's going to create challenges, particularly for those REITs that borrowed at very low rates. They need to do renovations to get folks back in, and it's going to be hard to do that if you have folks that are cutting office space. So I think those are going to be very challenged. And then on the other side of the equation, I have a bank on here, FFIN, First Financial, bank shares. I think regional banks do look very interesting to us. And if you take a step back, you think, well, is that a problem that the yield curve is inverted? And the answer is yes, it is a problem long term, but in the near term, it can create significant opportunity. If you rewind the clock back to 2000, which I think is appropriate given the valuations are back to those levels for many of the REITs, banks, as well as utilities, the yield curve was also inverted. And as it unwound coming out of that dot-com era, you saw significant outperformance in some of the regional banks. So the regional banks that I think folks should be interested in are those that not only are pinned to net interest margins, but also those that have some wealth management. And those recurring fees are going to allow them to better weather a challenging yield curve environment.
Okay. You mentioned utilities, so I want to go to one of your other picks, American Water. It's up 3% today. It provides drinking water, wastewater, and other water-related services in multiple states and Ontario, Canada. Talk to us about, just in the last 45 seconds we have with you, why you're bullish on American Water.
And talk about dividend growth. That's pretty impressive.
Yeah, so the dividend growth here at over 8%, again, more than double the rate of inflation. Very impressive, yielding over 2.5%, near 2.2%. This, again, is trading at the lowest multiple in over 7 years. And as you can imagine, utilities were the most hurt by higher interest rates relative to other areas for two key reasons. The first is that everyone thought we'd go into a recession in 2023, so they overpaid for utilities in 2022. And then as the Fed raised rates, those yields became less attractive, as well as concerns about refinancing. Now you're in a position where you've got significant dislocations in the valuations, growing dividends, growing earnings, as well as a lot of the infrastructure package should bode well for some of these companies like American Water.
Well, great to check in with you. Love talking names. John, thank you so much. John Mowry, he is Chief Investment Officer at NFJ Investment Group, joining us here on this Friday. Hey, coming up next, we get ready to wrap up the trading day, the week, and the month of May. We're going to head over to our TV colleagues in just a moment, talk about the markets. This is Bloomberg Business Week.
money news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 on Wall Street, 7 minutes to go until we wrap up the trading week and the month, and we are looking at the best level of the day right now on the S&P, up 31, a gain of 0.6%. Boston Beer shares soaring as much as 29% after the Wall Street Journal reported that the company is in talks to sell itself to Jim Beam owner Suntory. Boston Beer, right now, ticker SAM, is in Samuel Adams. It is up by 21.7%. Sources tell Bloomberg Carl Icahn has amassed a sizable position in hotel and casino operator Caesars Entertainment. Caesars is the largest owner of casinos in the U.S. Shares of Caesars up now by 12.5%. And Penn Entertainment shares soaring after an activist investor called for the sale of the casino company. Penn National up now by 20%. Dell shares down 17.8% after its first revenue increase since 2022 was not enough to impress investors. Wo Jinho is a senior hardware analyst with Bloomberg Intelligence.
What Dell is coming up against is trying to gain footprint, and the best way to get early footprint is pricing. If we listen to Supermicro's earnings call about a month back, essentially what they said was that their margins were going to be a little bit dilutive from competitive pressure. There are a lot of deals that are out there, and the first to win those deals could probably have a long runway to win more server deals in the future.
Wo Jinho of Bloomberg Intelligence. Again, Dell shares right now down 17.7%. Gap higher after earnings. Gap shares up by 28%. And those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, folks, just under 5 minutes to go until the trading session. And man, what the heck is going on?
What is going on?
I don't know. I'm going to do heck go on the terminal.
Is
what
that
the
a
heck?
thing?
No, it
Oh,
isn't. It isn't a
Sometimes
function.
you tell me there is Rich Go. That's a fun one.
Wait, what? Go?
Yeah, Rich Go.
No, that doesn't exist either. But as you
Yeah,
can
Rich
kind
Go
of
exists.
No, wait, what doesn't?
Oh,
though?
okay.
Wait, what? Go? No, we're seeing buying into the close. Can you tell it's Friday, everybody? It is. Anyway, we're getting ready to wrap up the day, the week, and the month of May. And man, we've seen quite a rally. Very much a risk trade on, bullish trade on for the month of May. But we're seeing buying into the close ahead of the weekend. And we are pretty much at our best levels of the session on the S&P and the Dow Jones Industrial Average. Not quite there on the NASDAQ, still a little bit lower here.
Can you explain it?
Can I explain it?
I can't.
No, and
I don't know what's going on.
I hate to say window dressing, but we're not wrapping up a quarter. We're not wrapping up a half. We're not wrapping up a year. We're wrapping up a month. I'm not quite sure what is going on. Do we have any? We don't have operations. I don't know.
Yeah, so far this month, though, stocks up about 4.7% on the S&P 500. The NASDAQ Composite up by 6.7%.
Even small caps are up about 4.8% so far here in the month of May. So, yeah, I'm not quite. I'm looking at our reading, a renewed bout of volatility gripping stocks, the final stretch of May, as the world's largest technology companies took a hit. If you look at some of those big tech names, they were really underperforming the rest of the market. I had a bunch of names up earlier. Microsoft was down. Let's see where it is right now. It was down as much as 2.5% earlier in the session, now down about 0.2%. We saw some other ones. Let me just look at NVIDIA, what it was doing in today's session.
It was lower earlier.
It was down more than 3%.
Yeah.
It's still down 0.8%. So some of those that have been fueling the rally, not participating, but nonetheless, yeah, we're seeing some buying here into the close.
Amazon, NVIDIA, Broadcom, and Microsoft are lower. On the upside, we're seeing Salesforce, ExxonMobil, United Healthcare, and Apple turning positive. You had to change your gainers because Apple was higher, then it was lower, and now it's higher again. I'm sorry.
Apple is on track for its biggest monthly advance in, I think, nearly 2 years.
Is it still going to be a gainer for you?
No, I got rid of it. I blamed
You can't
him.
see the future.
Blamed him instead back.
I said,
Apple's up
it's in the red.
13% here in May.
Wow. People were writing it off earlier.
It's kind of interesting, folks. Anyway, we're going to head over to our TV colleagues. We're going to count you down to close, wrap up the day, the week, and the month. Beyond the Bell. It starts right now.
Beyond the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. We're joined today by Carol Massar and Tim Stenovic as we welcome our audiences across our Bloomberg platforms, television, radio, and our partnership. Yeah, that is right, Carol Massar. Our partnership with YouTube here on the final trading day of the week.
So much for sell in May and go away, right? Look at this. First of all, we're having buying going into the weekend here. So we're going to finish, looks like, at our best level on the S&P 500. But I'm looking at gains in the month of May for the S&P, more than 4.6%. The NASDAQ 100 up about 6%. Even the small caps up about 4.8%. So we have seen investors in a big way come back into the equity trade.
Still, though, seeing some mega cap tech stocks dragging down the index in the S&P 500. Amazon, Nvidia, Broadcom, Microsoft, Netflix, Tesla, all weighing on the index, even though it's higher now, Alex.
All right, this is all really cool and fun, but Petco is ringing the closing bell on the NASDAQ, and they're puppies. They're puppies.
Yes.
Do you guys see the puppies? No. I'm sorry.
Not yet. We'll see them soon.
Do we care about anything else but the puppies? No. They're so cute. How can you not be in a good mood? Anyway, stocks off their lows.
So
NASDAQ
the marketing decision, you're saying the marketing decision worked on you?
Oh my
for
God.
them to bring puppies.
I mean, yes, come on, you bring puppies?
Is that why people are buying into the close?
Sure.
Okay.
Yeah,
I'm in.
Why not?
Yeah.
But buy into the weekend because they're puppies at the NASDAQ.
All right, we talk about sort of what went on the day and more importantly for the entire month here as we close it out here. A relatively tepid day, but I think as Carol was referencing here, we were in the red pretty much across the board for almost the entirety of the session. But as we get these closing bells, you hear them in New York. One of those bells, at least on the NASDAQ, being rung apparently by puppies. We should point out that stocks now moving into the green to end out the day, the week, and the month. The Dow Jones Industrial Average up about 1.5% here on the day. For the month, that's going to be good enough for a gain of more than 2%. The S&P 500 up 0.8%. That's a 5% gain for the month. The NASDAQ composite, we'll just call it unchanged on the now. It's going to be down basically about 2 points, so in the red on the day. But for the month, it is nursing a gain of about 7%. And the Russell 2000 also in on the action on the day here, of 0.6% gain here on the day and a 5% gain on the month.
Maybe they have some thoughts on the dogs of the Dow. You know, maybe we need to reach out to them and just ask them about that.
Nice.
Yeah, I know. Kind of lame. All right, S&P 500, folks. Most names in the index definitely higher today. 427 to the upside, 75 to the downside, and Alex, 1 unchanged.
I mean, really, let's take a look at the IMAP here within the S&P. Information technology now totally flat here on the day. Really impressive, just in that last half hour, how we really made up some of those losses. But energy is the best performing sector within the S&P, despite some waffly prices within oil. But then you have real estate, and then you have utilities, and that's really the bond story. As yields move lower in the bond market, those sectors become more attractive.
All right, let's get to some of the individual gainers. Gap among the gainers in today's session, folks, pretty much finishing at its best levels of the day, just shy of a 29% gain. Eye-popping earnings report that showed the overhaul by the company's CEO, relatively new, Richard Dixon, known to the Mattel universe, who really helped revitalize the Barbie brand at Mattel. Well, he seems to be revitalizing Gap in a big way, really kind of embracing celebrity marketing. We had Anne Hathaway wearing a Gap dress to a red carpet event. We had folks at the Met Gala wearing Gap items. So anyway, you see investors certainly liking their results. Caesars also popping in today's session, off its highs, up almost 18% at its highs today, but finishing with a gain of about 11.6%. Bloomberg exclusively reporting, that Carl Icahn has amassed a sizable stake in Caesars, according to people familiar. The size and Icahn's intentions not completely known. I think he also talked to CNBC maybe a little bit about this. So anyway, this stock definitely popping in today's session. Zscaler, we've been worried about some of the software space. Well, this is a company that plays into the cybersecurity world. This one surging about 8.5% in today's session. This after the company did beat estimates. It also raised its full year forecast. Demand for its platform grows. And as we head into the weekend, a little bit of beer news. Sam Adams, Boston Beer in talks for a possible sale to Suntory. This is according to the Wall Street Journal. So this name did surge to a record, at least intraday, finishing on this Friday with a 22% gain.
All right, some gainers. I got some decliners. Dell, we got to start with Dell, falling 18%. It actually fell the most since its return to the public markets back in 2018. We covered the numbers yesterday and the stock reaction as well. The first revenue increase since 2022 was not enough to impress investors. Those investors had really high expectations for the company's AI server business. For example, the backlog for Dell's AI servers, these are the ones that are powerful enough to equip or to handle artificial intelligence, increased more than 30% quarter over quarter, but investors wanted to see a bigger backlog. Shares of Moderna falling by 5.9% today. They fell after the FDA approved the company's RSV vaccine for adults aged 60 and older. Here's why, though. Analysts came out and said that data in the FDA's label for the vaccine highlights a weaker effectiveness compared to its peers. So despite the FDA approval, the shares fell. MongoDB shares under pressure since reporting earnings yesterday. Shares falling today by 24%. The shares fell as much as 27% earlier in the session. Had it closed there, it would have been its biggest fall ever. Shares did close off their lows, so just the worst day going back to September of 2022. The software company cut its full-year forecast. It's just the latest in a series of disappointing results from software companies. Think about what we saw from Salesforce yesterday. Last week, Workday saw its biggest sell-off since 2016. And also worth checking in on DJT, Trump Media and Technology. The shares were all over the place today. They did close lower by more than 5%, but they did swing between gains and losses. This after a New York jury found the former president guilty of 34 counts of falsifying business records. But the share movement wasn't clear in terms of what investors were thinking, because it was higher, then it was lower, then it was higher, then it was lower.
That is a pretty accurate response.
Yeah.
I appreciate that. Let's go to the bond market for a second, because we did see a bid. The 2- and 5-year hit a session lows at this month-end close. It was really the belly that got the outperformance. But interestingly enough, a 10-year yield for the whole month at one point was down 37 basis points. It ended about 17 basis points was the most that it moved this month. But it just shows that the selling that we have expected doesn't always materialize. We definitely see a strong bid. We were talking to somebody earlier about the fact that when you have an auction, you tend to buy after. And we definitely wind up seeing that kind of volatility and that whippiness in the bond market, guys.
All right, so as we get ready for the weekend, we're thinking a little bit about the Olympics that are coming up in Paris this summer. And on that, for the first time, they're going to actually have a beer sponsor for the Olympic Games. We're talking about Anheuser-Busch, and already bottles are rolling off their production lines in Belgium for the upcoming games. And what's interesting is these are non-alcoholic beers.
Yeah, so we've been talking about this for a few years because we've had the founders of Athletic Brewing on the show, and they're actually quoted in this story, but the rise in non-alcoholic beers has been pretty huge over the last few years. It still is tiny in comparison to beers that contain alcohol, but you'll notice that the marketing for non-alcoholic beers is so much different than it was just a few years ago, and indeed more and more people are buying them, and it's also available at more and more restaurants now, whereas just a few years ago you couldn't find this stuff anywhere.
Tim knows so much about this.
It's what I drink.
That's what he drinks.
Yeah.
Yeah, I mean, I don't really drink that much anymore either. Ever since I had long COVID a few years ago, and I do a lot of mocktails and stuff at restaurants, and man, those mocktails are like $20. First of all, they're good, yes, but they're like the same price as a regular cocktail, which is the same thing as like a non-alcoholic beer, and you're like, wait, why am I paying $20 for non-alcoholic beer?
Yeah, it does add up still, but it's nice to actually be able to drink something,
You know what you don't want to drink?
What do you not want to drink?
The Seine.
Oh yeah, good.
Oh,
good
you
segue.
you don't even want to swim in it, actually. So this is a great story that came, well, not for if you're an Olympic swimmer, but apparently the Seine is not ready yet for the Olympics. Its levels of E. coli is basically too much, and that basically is a sewage situation. Yeah, so you've had officials spend, what, over €1 billion, I think, on it, on the sewage issues, and it hasn't worked.
Well, don't worry. They still got, what, like 6 weeks to get it all together? So I don't know how long it takes to clean up a river, but I mean, this was something I remember they talked about during the trials here, and it'll get to the point where, you know, I don't know, either we're going to swim in a dirty river, or I guess we're going to swim in a vat of whatever the heck Tim likes to drink. I'm just a little confused, Tim, but you kind of threw me for a loop there. Okay. I mean, we all know you're the healthiest person on this network, or at least on this show right now. What's the appeal? I mean, if there's no alcohol to give you like a buzz or get drunk.
That's a good question.
Then, I mean, you just like the taste?
A couple things. Yeah, I do like the taste of an IPA, and there is one company that makes an IPA that kind of tastes like I like the taste of beer. I like drinking a beer. I just don't like the way it makes me feel when I drink a beer. Yeah, you can, you know, you're out with friends on a hot summer day. It's nice to be able to drink something that's not water, but also, you know, not going to make me feel a little loopy.
Okay, I don't. That doesn't compute with me. I'm sure.
You're going to Paris, you better drink wine. I'm just going to say.
Oh, yeah. Are you going to Paris and not drinking wine? No, you can't do that. It's just sad.
And then if you drink wine, you might jump in the Seine. Like maybe. I don't know. Or
Don't do
maybe
that.
not. All right, guys, that's a wrap. Have a good and safe weekend. Enjoy it. It's supposed to be, I think, a gorgeous one. That is our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is a Bloomberg Business Week. That is Carol Masser. I'm Tim Stenivek. Carol.
Yes?
Okay, get this.
What?
I'm just doing some quick calculations here on the Bloomberg terminal because the market's closed,
Yep,
okay?
done.
Shares of GameStop up 108% in May. You can go, that's official because market's closed. This was the last trading day of May.
That's a run.
It's a run. It's its best month going all the way back to January of 2021. That was the height, of course, of the meme stock craze. The reason I'm talking about this is because the last few weeks have been really the return of the meme stocks. Not just talking GameStop here, AMC has also had its best month in years.
All right, well, we can't talk about the meme stocks without talking about Wall Street Bets, the Reddit message board that, according to our next guest, quote, would eventually come to occupy a key position at the center of a movement that turned millions of young Americans into investors and traders. It's interesting how we continue to talk about the impact of this.
That line is from a brand new book that comes out on June 11th called The Trolls of Wall Street, How the Outcasts and Insurgents Are Hacking the Markets. The book by Nathaniel Popper, a journalist and author who's written for the New York Times, the LA Times, and more, who last joined us on our program about a decade ago to talk about his earlier book. It was about Bitcoin called Digital Gold. Nathaniel, welcome back. How are you?
Great. Thanks for having me again.
Yeah, congratulations on the new book. I want to talk a little bit about Wall Street Bets because we haven't heard a lot about it in the news in the last couple of years. It was all over at the height of the meme stock craze. But I'm wondering about the lasting durability of this army of what you refer to as trolls.
It's a fascinating topic that I do think most people forgot about since January 2021, when GameStop was really in the news and you couldn't avoid it. I think a lot of people thought that this was going to go away when GameStop went down, but more than that, people thought it was going to go away when the pandemic was over and these young traders would go home. And, you know, I'm writing this book about the story of how this happened, how this sort of online movement came to be. And one of the most surprising elements of the story is the way in which it has not gone away. You look at these statistics that we now have around retail traders, and you see that retail traders are still in there buying stocks and trading at the same level that they were back basically in 2021 when GameStop was happening. So, you know, this latest GameStop moment is just a sort of reminder of the fact that this whole world has not gone away.
All right, but it continues to play around with these stocks that, you know, many of us question the fundamental stories here.
Sure.
So, you know, I understand the lasting effect. It feels like a little bit like a video game I'm playing and so on and so forth. Is it something, though, okay, so it sticks around, but does it somehow broaden out and start to get into some names with fundamental stories?
That's a very important question for the future of the markets and for the future of the portfolios of all the people in this world, right? I think, look, on one hand, you have the importance of the meme stock movement in itself. And I think part of what's so interesting about meme stocks and GameStop is that there's something deeper going on there. People figured something out about the markets. You're right that in the end, GameStop going up was not about fundamentals. It was about social media personalities. But there was some discovery in there by the crowd of these weird market dynamics around options and market makers. And there was this sort of educational process that was happening there. You know, it's derided as this sort of idiotic flare-up, but there was something deeper going on there. And that deeper thing taps into your bigger question here, which is that our focus on meme stocks and GameStop, I think, has distracted us from the fact that this whole movement has broadened out significantly and now is much bigger than meme stocks. And in fact, meme stocks have gone down as a proportion of all retail trading. I think what you've seen is that retail traders, they are always thought of as the dumb money, but when you're in the markets and when you're investing and when you're trying things out, you learn things. And that you have seen that over time. You see that in this data that shows the trends, the trends that retail traders are following. And as I mentioned, the percent of all trading that's gone to meme stocks has gone down, and the percent that's gone to electric cars and AI plays and NVIDIA has been enormous. And so coming out of, in 2022, 2023, we had this market downturn. And that was another moment where everybody said, okay, these retail guys are going to get slaughtered. They're done. You see coming out of that the retail guys were buying when the markets were at their low, and they were not just betting on meme stocks. They were betting on AI plays. And so you see this sort of interesting migration. Obviously, it's also present in the whole crypto world, and that keeps going, and that's come back in ways that people didn't expect. But, the idea is this thing has gotten bigger than any one place. It's bigger than Wall Street bets, certainly.
That's so interesting, Nathaniel, but I do wonder to what extent the folks who you feature in the book, and then also the folks who just lurk in Wall Street bets, have actually made money, because there were so many stories post meme stock craze of 2021 of individuals losing fortunes, losing everything.
That is, so I think, I want to sort of split this into two halves. One of which is the sort of cultural phenomenon. And I think, losing has actually been a sort of central part of the Wall Street bets sort of culture, going back to 2015, going back even earlier. I mean, this place has now been around for more than a decade. And part of the culture was a recognition we're doing something stupid. It was about getting attention. It was part of this whole sort of 4chan trolling online culture that, by the way, I think is deeply interwoven with Donald Trump and the alt-right. I mean, all of this stuff, I sort of explain how it played, these different movements online played off each other over the years. And Donald Trump became this important figure on Wall Street bets. And part of that was this weird trolling culture where you're both joking and being serious and you're doing stupid stuff, but it's also smart at the same time. It's a very sort of complicated online world that I tried to untangle. But so that is one piece of this, and losing is a part of it. And there are, I chronicle some of these sad stories in my book, and including this suicide that really hit this community hard because of some of these losses. But at the same time, I tried to look at the data for both how Wall Street Bets was doing and how retail traders were doing more broadly. And I think what you see there is a slightly different story. As retail traders have gotten into the markets, they, as I mentioned, have learned, and the markets have come to seem less intimidating. And so, the markets used to be a thing that young people largely avoided. The markets were something for old white dudes who, were retired. And now it's something that kids care about. And the big picture data shows that it's very good that kids care about the markets, because the markets are a very good place to have your money. And even if, let's say you're making, you're trying to time NVIDIA or Apple, maybe you're not going to make as much as an index fund, but it's better you have your money in the markets than that you're just sitting on it, in your savings account. So that's the bigger transition that interests me.
And on some level, I feel like, Nathaniel, this is something that terrifies kind of the establishment of like, how this took off and is still around. And I think, you know, the financial establishment trying to figure out that younger generation and how they want to trade.
That's exactly where I want to go when we return in just a few minutes. We're speaking right now with Nathaniel Popper. He's the author of The Trolls of Wall Street, How the Outcasts and Insurgents Are Hacking the Markets. The new book out on June 11. You're listening and watching Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Wild finish to the final trading session of May. It is on to the trading month of June. S&P 500 spiked in the final 20 minutes of trading, and we had gains for the S&P 500 index, which spent most of the day in the red. S&P at 5277 as we move into the new trading month. Higher today by 42 points, up 0.8%. The Dow surged 574 points, up 1.5%. NASDAQ eked out a loss of 2 points to 16,735, little change. 10-year 4.49%, 2-year 4.87%. Spot gold today down $13 the ounce, down 0.6%, while West Texas Intermediate crude was down 0.9%, 77.23 for a barrel of WTI. Dell fell the most in 4 years after its revenue increase. First revenue increase since 2022 was not enough to impress investors. Dell today down 17.9%. Heading in the other direction, Gap higher after reporting better than expected results. It also raised its outlook for the full year. Shares of the apparel retailer up today by 28.6%. Again, recapping, turned out to be a mixed finish, but the S&P up 42, a gain of 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. I want to get right back to Nathaniel Popper. He's a journalist and author. He's the author of several books, including the latest, The Trolls of Wall Street, How the Outcasts and Insurgents Are Hacking the Markets. There's a great excerpt from the book in the forthcoming issue of Bloomberg Businessweek magazine. That excerpt published this morning. You can read it on Bloomberg.com and on the Bloomberg terminal. And again, it'll be in an upcoming issue of Bloomberg Businessweek. Okay, Nathaniel, we got to talk about a couple of the main characters in the book here. Jamie Rogozinski and Jordan Zazera. Who are these guys?
Jamie is the founder of Wall Street Bets. He's a guy back in 2012 who created this subreddit. And at the time, it was basically an escape from his alcoholism. He was basically a 30-year-old guy working at a job he didn't really like. And he was looking for basically ways to fill his hour when he was at home drinking alone. And he began trading, and he realized that trading was much more entertaining than he thought it would be. And he liked talking about it with people, and so he created this subreddit, which he called Wall Street Bets. And what's so interesting about Jamie is that it turned out that there were a lot of other guys in a similar situation, guys who were sort of struggling in life, struggling to find their place, feeling sort of alienated. And this community grew up around him, and he found company in it, and it created this strange culture that we now know of as Wall Street Bets. By the time he got kicked out of Wall Street Bets, which is one of the interesting chapters in this book, Wall Street Bets had attracted 1 million members. And that was when the sort of next phase of Wall Street Bets happened, which was really during COVID. And that was when this young guy named Jordan Zazera took over as the sort of main moderator for the subreddit. And he is another interesting character who's never really found his place in life, never really got a job he liked. And he found this community, and he found something so meaningful and rich in it, even in all of its twisted humor and dark humor. I mean, it's a weird place, but the strange thing was this had a real hold on the people who came there, and it became a real community. And I think that's something, again, when we talk about meme stocks, it's easy to miss the way in which this feeds into this much bigger culture and this much bigger set of needs that the young guys coming there have.
So the pandemic, some people made a lot of bread, some people got puppies, some people took up crafts or some kind of musical instrument. These guys obviously got into stocks in a big way and had some fun. One question is, if the pandemic hadn't happened, would you have written this book? Would we be still talking about kind of the meme stocks and the meme stock frenzy?
I think that even before, it's fascinating. One of the chapters I tell in my book is 2 months before COVID showed up were those 2 months were the first time that Wall Street Bets realized its power for the first time. That was when they sent Tesla basically to the moon, as they put it, and in a matter of a couple of weeks. And right after that, they started experimenting around with these other stocks. They had sort of realized the power when there's 1 million people who come together in the markets and try to do something, even if they're not explicitly trying to manipulate the market, the way social media can just bring people together around an idea, around activities. So that was happening before COVID happened, and that was in no small part because trading fees had disappeared, right? Robinhood had showed up and killed trading transaction fees, and then everybody else had to follow them. And once trading was free, it suddenly seemed a lot less forbidding. So that happened before COVID. But certainly during COVID, you went from having something like 2 million members to having 15 million members. And that was a significant growth. And that was really when we saw retail trading. It went up from sort of an average of something like $10 billion a month before COVID showed up, to something like $50 or $60 billion after COVID showed up, and that's still where we are. And so we saw a 5 times leap in the amount of stocks that were being purchased every month. And that's just a big change, no matter how you think about whether it's people being stupid, there's so much complicated stuff going on there, but that's a lot of money.
It is a lot of money, and I'm wondering about, we talked about the durability of the movement earlier with you, but I'm wondering about this idea of, quote unquote, sticking it to the man. Because there were moments during 2021 where that was a big part of what Wall Street Bets wanted to do. They wanted to show those hedge funds that they were smarter. They wanted to outsmart the hedge funds that were betting against GameStop. Were they successful? Did they stick it to the man?
It's yes and no is my maybe disappointing answer. But I think that what has happened has led to a real chastening of institutional investors. Institutional investors have realized that these traders are a real power in the market when they come together. And you see this, you see this even in hedge funds complaining about the way markets keep going up, right? Even just today, we saw the markets soar at the end of the day. It feels like markets are just sort of like attached to a helium balloon. And you see hedge funders complaining about that now. It feels like all fundamentals, all rationality has gone out of the market. And I think something has changed in the way people think about markets. And so certainly, the David Goliath story, there are a lot of these little Davids who lost money, but there are really also a lot of Goliaths who lost a lot of money in this. Even when you look at just the amount of short selling that hedge funds on Wall Street do, it has just gone down. It's not as though it just went down and came back up. There is a fear in the markets, and it has changed the dynamics. And that goes back to the idea that this online community, like so many online communities, is about distrust. This alienation in American life and this distrust of the institutions. And obviously that's playing out in politics. That's playing out in the presidential election, but that's also playing out in the markets.
So where do we go from here? Chapter 17 not going away. What happens to the trolls of Wall Street? Do they remain outcasts? Do they become more establishment? Does the establishment become more outcasts? What happens?
That's a great question. I'd actually be as interested in hearing your opinion. I certainly don't have a crystal ball on this. I do think, once you see a change like this, it's like the generation that came of age during the financial crisis or during the Depression, you hear about how that just stays with them forever, right? Like that, it scars people when they go through a financial experience that is dramatic. It's hard to get away from that narrative once it's in your head. And I think that's part of what's happened here, which is that it feels like ordinary people are in the markets and should be in the markets. And I think that is going to stay with this Gen Z and probably Gen Alpha when they're old enough to get their Robinhood accounts. And many of them actually, I know so many 13-year-olds, 14-year-olds, 15-year-olds who have, their Coinbase account, their Robinhood account. It's just like a part of popular culture now in this crazy, strange way. And frankly, I don't know what that means for the markets, but I think the fact that they're not going away is something that everybody needs to be thinking about.
All right, so who plays Jamie in the Netflix series?
Let's see. I guess Paul Dano's already been taken. I think Jamie asked if Brad Pitt could play him. I don't think that's going to happen. But
why does everybody always want Brad Pitt to play them?
Because why wouldn't you?
You do not want Brad Pitt to play?
Exactly.
Right,
I want Brad Pitt to play me in anything. Having said that, are people reaching out to do something about this and bring this to life on the big screen, little screen, or whatever? It just got about 20 seconds.
I'm hoping so. It's early in the conversations, but I'm hoping that this picture will be a bigger picture because it's sticking around. It's not going in.
He's got experience doing this too.
I know.
So yeah, Nathaniel, he knows how the game is played, I guess.
All right, good stuff always, and fun to talk about it because we do continue to talk about it certainly here at Bloomberg. Nathaniel Popper, the book, The Trolls of Wall Street: How the Outcasts and Insurgents Are Hacking the Markets.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden today announced what he says could be a deal to end the Israel-Hamas war. Biden says the first phase would include a ceasefire and exchange of hostages.
Humanitarian assistance would surge with 600 trucks carrying aid into Gaza every single day. With the ceasefire, that aid could be safely and effectively distributed to all who need it.
President Biden says the U.S. helped Israel broker the proposal to Hamas for a three-phase plan aimed at a permanent end to hostilities. The president also today blasted Donald Trump's attacks on a New York court that found him guilty in a criminal trial over hush money payments, arguing they threatened to destabilize the U.S. legal system.
Our justice system has endured for nearly 250 years, and it literally is the cornerstone of America. The justice system should be respected. We should never allow anyone to tear it down.
Biden pointed out Trump was afforded all the rights of any other criminal defendant. This after Donald Trump himself insisted the trial was unfair.
Now, I would have testified. I wanted to testify. The theory is you never testify because as soon as you testify, anybody, if it were George Washington, don't testify because they'll get you on something that you said slightly wrong and then they sue you for perjury.
Trump's team is expected to file an appeal. Sentencing is set for July 11th. And Donald Trump's conviction has provided a cash bonanza for his run for the White House. The Trump campaign says it raised $34.8 million in the 24 hours after the guilty verdict, and that 30% of those were first-time donors on the GOP WinRed online fundraising website. Wall Street billionaires tell Bloomberg that they'll continue to back Trump despite the verdict. Both the Trump and Biden campaigns sent out fundraising solicitations after the jury found Trump guilty. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long at Bloomberg. It turned out to be an up Friday for the S&P 500 index after spending most of the session in the red. The S&P spiked in the final 20 minutes of trading, ending with a 42-point gain. We head into the trading month of June at 52.77, up today by 0.8%. It was a losing week for the S&P 500 index. The Dow surged 574 points, up 1.5%. NASDAQ was little changed on the day, down 2 points, down less than 0.1%. 10-year yield 4.50% with a 2-year at 4.87%. Spot gold today down 0.6%. 23.28 for an ounce of the precious metal, while West Texas Intermediate crude oil was down 0.8%, 77.27 a barrel on WTI. So where are the opportunities in this stock market? John Mowry is Chief Investment Officer at NFJ Investment Group, and he was a guest right here on Bloomberg Business Week.
There's been a whole area of the market that's been kind of gullied out, if you will, and that would be some of the banks, some of the REITs, the utilities. These areas have been directly impacted by the interest rate policy, and they predominantly sit in some of the smaller and medium-sized areas of the overall U.S. capitalization. So we do see opportunity there.
John Mowry of NFJ Investment Group, a guest here on Bloomberg Business Week. Hess shareholders have approved the company's proposal to be acquired by Chevron for $53 billion. It was happened by a razor-thin majority of 51% of shares outstanding. Shares of both companies did advance today. Chevron up 2.5%, Hess up by 2.6%. Recapping S&P ending at the high of the day, up 42, up 0.8% as we head into a brand new trading month. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Oh, it don't mean a thing if it ain't got that swing. Do I.
Love me a little Ella Fitzgerald. Speaking of swing, makes me think a little bit about golf. You probably, if you think about the game or the sport, you'll bring up the PGA Men's Tour, and you would be right. Yet, thanks to the pandemic, Tim, more women are engaging in golf.
Okay, check this out. The National Golf Foundation reported last year that one of the most notable aspects of the pandemic-driven rise in participation over the past 3 years has been the influx of women and girls. The organization noted that there are about 6.4 million female golfers, up from 5.6 million in 2019, with the female golfer pool jumping 15%, Carol, compared to a 2% lift among male golfers.
I have some nieces and a sister-in-law that you can add to that list there. This brings us to the Women's U.S. Open, currently underway at the Lancaster Country Club in Pennsylvania, round 2 today. We welcome back Jill Spiegel. She's president of the PGA Tour Superstore. She joins us in Atlanta. Jill, great to have you here with us on this Friday. I grew up watching a lot of golf. My dad, my 4 brothers, they were all in. I never learned to play, which really upsets me.
It's not, you can learn to play.
I know, and I do think about it.
You just need like 4 hours on a Friday, get out there on the links.
Right after I finish this 3-hour show, you got it. Hey, Jill, what are you seeing when it comes to women engaging as a player, as a fan, and individuals who are interested in golf-related merchandising?
Yeah, well, you guys quoted a couple of the stats in your opening, and it's really fun to watch. 26% of all golfers are women, and 60%, a lot of new people came into the game, and 60% of new golfers that came into the game over the last few years have been women. So we anticipate that 26% climbing over 30 here in the near future. And what's really exciting as well is, over 40% of 18 and under golfers are girls, which is great. So that trend is going to continue. And it's really exciting to see, not only in women's golf, but in women's sports in general. If you look back just a couple of months ago with the craziness around Caitlin Clark and how that's translated into the WNBA, it's really exciting. And the women's purse this weekend at the U.S. Open is it's $12 million, almost double what it was just 3 years ago. Viewership is much, much higher on the LPGA, and the media consumption is 12 million viewers a week versus what was just 4 million a few years ago. So it's really fun to watch. We are very supportive of the female customer in our stores. In several of our locations, we lead with women's apparel. In our resort locations, we actually sell more women's apparel than men's apparel. So it's always been an important business for us, but we're continuing to really focus on it and continue to grow it. And You know, if it's 26% of the business, we want it to be 35, 40% of ownership.
I want to take a step back. Why do you think more women, more girls in particular, are engaged? What is it particularly? Is there a player? Is it like what's going on?
Well, you do have that. I mean, you have Nelly Corda, which has been amazing to watch this year. I know she's having a tough weekend, but she's won 6 of her last 7 tournaments. And I think COVID was really good to the golf industry in general. And I think it attracted more women at the time. People, adults were working from home, had more flexibility, and were getting out on the course. And you're seeing the demographics changing a lot, which is nice. It used to be middle-aged white men, and you're seeing, not only are you seeing more women, but you're seeing more people of color and a lot more youth. So I think it feels more accessible, more fun. It's I think golf can be very intimidating if you're new to it, and I think some of those barriers are getting broken down, and I think it's a little more casual than it was.
I'm wondering about how much that growth from the COVID era has continued. I'm a cyclist, and I think the cycling industry got a huge boom during COVID, but it is just getting crushed right now because how many bikes do people really need? I won't answer that question because I need a lot.
How many, Tim, do we need?
Always one more is the answer to that question.
How many bikes do you have?
Too many bikes. What I will say, though, is some sports are not seeing that bump continue. What can you tell us about golf?
Well, it's a really good question, and you quoted some stats from the NGF, and we look at it closely too. And 2023, 2020 and 2021 were record years, and the last 4 years, rounds of golf have been at an all-time high. With 23 at a peak, over 530 million people rounds of golf were played, and participation was almost 27 million. And in 2024, rounds of golf are up over 2023. So we were all holding our breath. Our business doubled during COVID, which is tremendous. And we were thinking, when is the air going to come out of this balloon? And it really hasn't happened. The industry has never been healthier. And what's exciting to see too is not only are people playing golf on the golf course, more people are actually playing off-course golf. And when I talk about off-course, what I mean is simulator golf. They're either going into a 5-iron or a Top Golf. And 10% of those people are converting to green grass golf. So it's the growth continues, and you're right. There's a lot of sports that saw a huge spike during COVID, and they're regressing down. In golf, recreational golf has never been healthier. 1 in 9 people are playing golf, and the beauty of it is all ages can play, all abilities can play, and you can play together regardless of your skill level.
So if you
That's how the game is set up.
Is there any correlation if you play a lot of miniature golf that you actually
the putting, the short game?
Golf?
Are you kidding? The short game, of course.
I'm just
wondering. Your putting will be very good, and but it's people who used to go to Top Golf, and Top Golf has been very good for our sport.
Yeah.
They'd go to Top Golf, and it was food and beverage and entertainment, and then they'd go home. But now it's people are sparking an interest, and we're seeing in our business, the technology business is really, really healthy, and the simulator business is healthy, and there's a launch of an interactive league starting this January with professional golfers called TGL, and you're going to see that 24 of the top players on tour playing simulator golf down in Florida on Monday night.
That's really cool.
There's this whole resurgence of different ways you can take in the sport, and simulator golf doesn't take 4 hours, and you can play it in a couple hours or an hour even. So it's opening it up and making it more welcoming, without the time commitment.
What's just 30 seconds? What's the line you can draw from the popularity of Top Golf to people actually going out and playing golf more?
The line? Well, I think people are more comfortable. They get a taste of it. They know that it's fun. And they're like, I'm going to give it a try. So it's, like I said, we never saw that conversion before. And for 10% people, 10% of, fun golfers going out and actually taking up the sport, that's going to be a lot more people coming into the game and growing the game.
Really interesting. Well, listen, good luck with the tournament and everything this weekend. Really great to get some time. Have a great weekend. Jill Spiegel, she's president of the PGA Tour Superstore, joining us from Atlanta. $12 million purse.
Let's go play some golf.
I know. It's the one thing I regret not having learned with my dad. I know it's never too late. Now. But my understanding is he was a great teacher, so I can't do that.
That's true.
All right. You're watching Bloomberg.
From Bloomberg World headquarters, I'm Charlie Pellet. Look now at company news, and Boston Beer shares jumped 22% today, a record amount, after the Wall Street Journal reported that the company is in talks to sell itself to Jim Beam owner Suntory. Sources tell Bloomberg Carl Icahn has amassed a sizable position in hotel and casino operator Caesars Entertainment. Caesars is the largest owner of casinos in the United States, up today by 11.6%. Elsewhere in the casino industry, Penn Entertainment shares soared after an activist investor called for the sale of the casino company. Penn National Gaming today up 19.6%. Delta Airlines CEO Ed Bastian says supply chain choke points that developed in the wake of the pandemic remain an issue for the aviation industry, alongside extended times for engine repairs that are among factors restraining growth. Bastian spoke with Bloomberg News today in Doha.
It's not just Delta, it's the industry. And the turn times are longer. You now have turn times on planes that could extend up to months rather than weeks, which they should be. Parts are higher than ever. Material costs are growing. The manufacturers across the industry are having challenges.
Delta's Ed Bastian speaking earlier today with Bloomberg, and Delta shares advanced today by 1.8%. Dell Technologies down 17.9%, falling the most in 4 years after its first revenue increase since 2022 was not enough to impress investors with high expectations for the company's AI server business. And again, shares of Dell Technologies today plunged 17.9%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
Today's Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Party leaders on Capitol Hill have officially extended an invitation to Israeli Prime Minister Netanyahu to address Congress. Now, the date isn't certain, but the Hill is reporting it could happen in the next 8 weeks. President Biden has detailed a three-phase deal proposed by Israel to Hamas militants that he says would lead to the release of remaining hostages in Gaza and could end the war. Now, Biden says Hamas is no longer capable of carrying out another large-scale attack on Israel, as he urged both sides to come to a deal to release hostages for an extended ceasefire. One phase of the deal calls for beginning major reconstruction of Gaza. Donald Trump speaking at Trump Tower this morning, a day after his historic conviction on 34 felony counts. He repeated his unfounded claims that the trial was a rigged political prosecution and that he will appeal.
We're going to be appealing this scam. We're going to be appealing it on many different things. He wouldn't allow us to have witnesses. He wouldn't allow us to talk. He wouldn't allow us to do anything. The judge was a tyrant.
President Biden blasted Trump's attacks, arguing that they threatened to destabilize the U.S. legal system. Biden said the verdict reaffirmed the American people, that no one is above the law, and pointed out that Donald Trump was afforded all the rights of any other criminal defendant.
And it's reckless, it's dangerous, it's irresponsible for anyone to say this was rigged just because they don't like the verdict.
Now, in less than 24 hours after that verdict was announced, the Trump campaign raised more than $35 million. Some financiers who abandoned Trump after his supporters stormed the U.S. Capitol on January 6, 2021, and kept their distance as he continued to claim falsely that the 2020 election was stolen, are now throwing their weight behind him again because Donald Trump has promised to cut taxes for the wealthy and eliminate regulations. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
Amy Morris, have a great weekend. I got to tell you, Tim's looking at me like, what are we going to talk about? I'm like, hey, we're just like 2 minutes to the weekend.
I got good news and bad news for you.
What's the good news?
The good news is that
2 minutes to the weekend.
Friday at almost 5 p.m., so it's almost the weekend. The bad news is it's a 2-day weekend. And after a 3-day weekend, a 2-day weekend can feel, well...
like what happened?
Quite a bit shorter.
Yeah, exactly. Nonetheless, we are grateful for a 2-day weekend. Hey, did you do the Bloomberg quiz?
I didn't. I was so excited about my 5th place finish last week, which was a very big deal. I haven't done it yet this week. Did you do it this already?
I did. I'm number 23.
That's pretty good.
Out of the firm, yeah.
Just a reminder, if you have a Bloomberg terminal,
And I
type
think
in quiz go into the terminal and you can do the quiz as well.
I think I got them all. I just was slow. You have to get them all, but you also have to move fast.
The Bloomberg terminal is an amazing piece of technology.
Yeah.
I think the quiz alone is enough to justify a subscription.
I wanted to do a live segment on air.
It's very good.
That was the quiz, because it's just
I'm going to do the
so
quiz as
much
soon
fun.
as the program's over because I forgot to do it.
You can ask, well, our Sarah Livesey was in the room a moment ago, and I said to her, when something happened during the week, I'm not going to give it away. I said, this is going to be on the quiz.
Was
and
it?
You know what? It's on the quiz. When she was doing it, she's like, Carol, it's on the quiz.
Oh, wow.
You can kind of tell. Having said that, our most read story on the Bloomberg in the past week, Donald Trump becoming the first former U.S. president guilty of crime. So most read is one of those functions we love to go to on the Bloomberg, and that is certainly, that's our number one read story in the past week. Having said that, we have a story in our weekend show. Actually, we talked with our Josh Green before the verdict came down, so full disclosure, but it got into some voters who are out there, and they are thinking about if Donald Trump gets back to the White House, what is one of their big concerns?
One of the big concerns is that he'll never leave the White House.
Trump forever.
And this is voter concerns. And remember, it's a very small number of voters who will decide the election in a handful of swing states come November.
Yeah.
So important to learn from these focus groups right now.
All in on Dell and AI. Dell having a rough week. They hit a record, and then they sold off following their earnings. Some concerns. So we check in with the Dell CTO. That, again, was before earnings. And then Randy Bachman of BTO.
Michael Dell's wealth fell by the most ever today as sales disappointed. $11.7 billion.
Our thanks to our team, including Anthony Mancini, Colin Tipton, Justin Milliner, Sebastian Escobar, Sarah Livesey, Elizabeth Cedron, and Paul Brennan. Catch our weekend show, everybody. Have a good and safe weekend. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Donald Trump re-airs grievances in a speech after his felony conviction, which President Biden says reaffirmed that no one is above the law. We'll assess the ramifications for both of their campaigns with Larry Sabato of the University of Virginia Center for Politics.
Biden today also announcing a new Israeli ceasefire offer to Hamas, a three-phase plan including the withdrawal of Israeli forces in exchange for the release of hostages. Evelyn Farkas of the McCain Institute joins this hour with more.
And data this morning showing a cooling in the Fed's preferred